Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning and welcome to The Bigger Picture. We're on to a fresh week, and that also means the release of a fresh set of earnings. And in one of the most anticipated news, we're turning to one of our three local banks that had just reported their fourth quarter 2024 earnings about an hour ago. So in the next few minutes, we'll be diving deep into DBS's latest financial report card, and then what kind of tone it sets for UOB and OCBC, who are set to release in the coming weeks. We're also turning to US tariffs and what's to be expected in terms of US data this week. And to help us with that and more, let's welcome on the show Daphne Tan, the Director of Business Development, CMC Markets Singapore. Good morning, Daphne. How are you doing today?
Good morning, Dan. I'm doing well, thank you. How about yourself?
Not too bad. Thanks for joining us in the morning, Daphne. Now, to kick things off, let's talk about DBS's latest fourth quarter earnings for Singapore banks. It kicked off the season for the three local banks, and based on the track record, it's been beating expectations. So, is Singapore's biggest bank keeping up with the momentum, and what stood out for you?
Definitely. So we'll start with net profit and total income. Their Q4 net profit of 2.62 billion matched estimates, and it was an increase from 2.39 billion by 10% year on year. So that was quite a growth. And full year net profit for 2024, it rose 11% to 11.4 billion. So that was for net profit, and they also experienced growth in total income. For Q4, it grew 10% to 5.51 billion, and for the full year, it grew 10% to 22.3 billion in a few areas. So we can look at full year commercial book net interest margin, which rose 5% to 50 billion, and their fee income also crossed 4 billion for the first time. They performed well in treasury, customer sales, and markets trading income as well.
Wow, fantastic. Those were some great numbers that we're looking at today. And of course, we can't ignore the dividends that investors will be looking forward to, as that's an attractive place for investors looking to capitalize on, an extra stream of income. So what can you tell us about DBS's latest dividends?
Dividends are what investors want to hear about the most, so they'll be glad to hear that DBS has declared a dividend of 60 cents, up from 54 cents per quarter for Q1 to Q3. So that brings us to a total dividend of 2.22 per share for FY 2024, which is up 27% from the preceding year.
That sounds so sweet. Made the Monday so much better. Now, definitely, over the past year, the banks have outperformed the broader Straits Times Index, which returned 22.7% as of 31st January of this year. And among the banking trio, DBS led with a stellar 54.8% increase, followed by OCBC at 35.9% and UOB at 32.9%. So what's your outlook looking like for DBS and other banks as well?
DBS looks likely to lead the pack, as they have done for Q3 and 2024 previously. So we still need to wait for the results for OCBC and UOB. But in general, what we can look at is the macroeconomic environment. So we are expecting some trade policy impacts, which may impact the bank's margins. However, it seems that Singapore banks are fairly well placed to weather that.
Now let's shift this conversation over to the US, where tariffs have been top of mind for everyone. And just yesterday, Donald Trump said he will announce new 25% tariffs on all steel and aluminium imports into the US today. So that comes on top of existing metals duties in another major escalation of its trade policy overhaul. So definitely, what should investors watch out for on top of that on the Trump tariff front?
What investors should watch out for? So the impact of trade war, the first thing we think of would be stagflationary shock. So what that means is it's a rapid increase in prices amidst a weak or weakening economy, which then makes it tricky for policymakers to combat in terms of interest rates. For that, investors can expect quite a bit of market volatility, especially when it comes to how the countries respond to Trump's tariffs as well. So in which case, if they do have any investments in the assets that are being affected, they should have some risk management in place, as well as be ready to pivot at any point in time.
All right. Okay, now in terms of US data then, what's on your radar?
On my radar, we have inflation data, which is coming out on 12th of February. That's the CPI. That will be 9:30 p.m. SGT our time. So for headline CPI year on year, it is expected to remain consistent at 2.9%. For core CPI, which strips out the volatile items, it's forecast at 3.1%, which is slightly lower than previous of 3.2%. So what we also need to look at is PCE, which is the Personal Consumption Expenditures Index, rumored to be the Fed's preferred gauge of inflation. That's coming out later this month on 28th of February. That so far has remained constant from October to December at 2.8%. So what we really want to look out for is lowering inflation and staying down as well.
Okay, lots to look out for in the coming weeks ahead. Now, one final thing we're turning to is bullion. And, gold prices resumed its uptrend last Friday amid the escalation of the trade war between the US and China, as well as a mixed US employment report. So, Daphne, talk to us about how attractive gold prices are to you now, and what's your outlook for bullion prices?
Gold is currently trading under its recent high. So we have spot gold as of this morning trading at about 2,869.10 cents per ounce. That's in USD, and gold futures as well at 2,894.5 per ounce. So what we have seen for gold is it has appreciated quite a bit, and we need to consider that amidst this climate of volatility and uncertainty, there is likely further room to appreciate given what the world is going through at the moment. So this is something that investors can look at to either as an alternative asset to fall back on should the equity market not be doing so well, for example.
All right, fantastic. Thank you so much for joining us this morning, Daphne. We've been speaking to Daphne Tan, the Director of Business Development, CMC Markets Singapore, talking through DBS's latest financial results as well as US tariffs and data to look forward to. Thanks for joining us this morning, Daphne.
Thank you for having me, Dan. Have a great day ahead.
You too. Now stay with us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.